Hey guys, today is Friday, June 17th, 2022, and I'm not trading. I'm in the middle of my time off here to lug boxes and arrange for more painting and cleaning and sale of my mother's old house, etc., along with a bunch of other stuff that just has to be dealt with right now. But I just got a text from a friend of mine with a really good question, and something that I haven't had to deal with yet because I haven't been in the market since Monday. Wondering about rollover and when does that happen and all that. Great question. Futures contracts have expirations. At some point you have to stop trading the current contract and start trading the next one. Otherwise, if you try and place an order, you're going to get kind of a rude awakening. I'm going to take a few minutes and head downstairs and go over this with you guys.
So let's go over what the futures rollover thing is. It's kind of confusing if you haven't traded futures before. It's different than stocks, it's different than Forex and things that most people have traded before or might be used to. So futures contract has an expiration. Now they're different depending upon the contract. The energies are generally monthly. They expire every month. So there's a January, February, March, April, May, June, July, and so on. Index futures, however, are only 4 times a year. March, June, September, and December. And they have a letter attached to them, which makes it kind of confusing. It doesn't really matter when you're using TradingView because it makes it easy for you. But if you're on Sierra Chart or any other physical platform like that, it's going to have a letter associated with it. And you just get to learn those letters. March is H, June is M, September is U, December is Z. It's last. Z, Z, whatever you like. So that's how that works. So now when you're in TradingView, as I can imagine when my friend texted me, he probably went on here and looking at the June contract. Now it's currently about almost 10 o'clock on Friday the 17th here. And today is what's called the settlement date of the June ES contract. There are 2 important dates you need to know for each contract. One is the first notice date. Okay, the first notice date is essentially the day before the settlement date. The idea is that that's the first day that you can be required to take delivery, etc., of your contract, and then the day after first notice date, which is today, is the settlement date. So in theory, if you didn't exit your position, this is the day that you'd have to make up for it in cash. Or if it's an energy contract, that'd be the day that you're supposed to take delivery of all your oil. In practice, your broker, knowing that you're a retail trader, is going to take you out without letting it expire or roll it over or something. But you still should know this, because if you were to sit down to trade this morning, I don't have my Sierra open here because I want to use the whole window, but let's just use TradingView for instance. If you were to sit down and want to trade this morning and look at the DOM, what? Look at the spread, right? You got a 3.5 point spread and only 1 order on each of these. You can't trade that, right? So obviously the chart is broken. Another example of a broken chart would be, say here, if we went to a heating oil chart and we were to actually, instead of looking at the current month, we look at December. That's a broken chart, I would call it. And sometimes when you have your charts up, you just see, oh, that one's broken, I got to roll it over. Because look, it's all this one tick prices and stuff. It's not the active contract that people are trading, right? I'm going to show you guys how to do this to roll over, for instance, your ES contract. Now in TradingView, it's extremely easy. They pick your chart, whatever one it is. We'll just maybe blow this up to make it simpler. You click on the chart anywhere, and you just start typing the name of the instrument, ES in this case. Now, say if you're over here, it still comes up first, but I just leave this futures tag checked because it's the only thing that I really care about on here. So say you were looking for the micro ES, which my friend was. So there, micro ES, okay? And then what you don't want to do is just click on this, because then it gives you the continuous contract, which is great for research purposes, but you can't trade it. So let's try this again. For me, I'm going to use the ES because that's what I'm charting and trading. This little thing over here opens up everything underneath it. And what do we find here? They make it easy because they give you the months on here, right? They only give you so many options. But here you'll see the letters. June is M, ESM. September is ESU. December is ESZ. Next March, ESH. Really simple, so we'll just choose September. So now we see that we've got proper amount of orders on the ladder, and the spread is, 0 to 1 tick type of thing like it's supposed to be. So that's how you roll a contract over. Now, how do you figure out when you have to roll it over? There are a number of places you can find this online. It's also done up on some sites, but this is on the CME group itself, and this is the expirations calendar. Now it's got a whole bunch of stuff going on. There's 517 trading events today. Now, one of those is the fact that it's the settlement date on the ES. So what you want to do here is filter calendar events. You can just go view all, select products, and start typing what you're looking for. In my case, ES, S&P 500 futures. Click. Update calendar. Suddenly gets much smaller. We have 2 events for today. It probably doesn't show first notice date being yesterday. June 2022, last trade date. June 2022, settlement date. There you go. So let's see what the other event is. September 2024, contract, first trade date. You don't want to be trading that, though. It's way too far out. Okay, while I'm at it, guys, I just got an email from my broker, and if you guys are trading live, or if you even just have an account with a broker, so you're getting live data, whatever email that your broker sends, the kind of notices that are important, like schedule changes, margins and stuff like that, take that email address and don't just put it on your list, add it to your VIP, because when they send you something from that email, it's most likely going to be something pertinent. It's not going to be much stuff. It's just going to be like, if there's an increase in margins, I got an email the other day, there was a temporary increase in margins ahead of the interest rate decision. This stuff you need to know about, like right away when it happens. Same thing if there's a problem with data or something, like CQG has an outage or something like that. You want to know about that right away. Now, I just going through my email, and I got one from my broker, and it's about the Juneteenth market holiday on Monday. Let's take a look at how this works. And what they'll do is essentially send you the screenshot of this same thing. But this is on the CME website, okay? CME Group Holiday Calendar. It's very easy to just Google this stuff and it comes right up. I like the compact Excels, just way less confusing, tells you just what you need to know, nothing else. Okay, Juneteenth. And your broker will send you generally a screenshot of this exact same thing right to your email box. So this is what you'll get from your broker. Now, these are a little bit confusing to read, especially at the start until you get used to it. So let me just quickly go through it. First of all different markets don't observe the same schedules. Generally, the ags and stuff like that, they will take longer off. They don't bother opening up at all on the holiday, whereas the indexes, they'll always be open, pretty much every day, at least for part of the day. But if there's an early close, you don't want to trade that day because the volume is generally way down. First of all, what I'm looking for is equities, okay? So equities is the ES, the YM, the S&P, the Dow, the NASDAQ, the Russell, the equity products. Friday, close, regular, 16 o'clock Central Time, 4 o'clock Central. Remember, everything to do with the CME is always in Chicago time, Central Time. Sunday, open is regular at 5 o'clock Central. So this is where things change here. Monday, halt. The equities on a holiday like that, they usually don't take the whole day off. They just take the afternoon off. But when they do take the afternoon off, generally it's not a great day to trade because there's just not nearly the volume or the movement in the morning. No, sometimes there is, but I don't trade those days. They're just consider that a holiday. So what happens here then? On Monday, there's a halt, which essentially means an early close, but not really. That's why they call it a halt. Early close at 12 o'clock Central. Okay, so 1 o'clock Eastern. And then it opens back up at 5 o'clock on Monday. So the market goes back to normal at 5 o'clock. So it was closed from only 1 to 5. So you'd figure that's not a big deal. I don't really trade that anyway. But like I say, this morning here is not going to be, as a rule, really great trading. Could just take those days off, do something else. Now, it's not the same for everything, of course. The equities and the interest rates, I believe, are exactly the same. But currencies, they only close for an hour. They're only closed from 4 o'clock to 5 o'clock. Energies and the metals, same as the crude oil close of the pit was always 2:30. That's when the daily settlement price is determined. And the grains, they essentially take the day off. They take a pre-open all day. And pre-open just means like you can enter orders and you can modify orders, but it's not trading. You can just enter your orders that are kind of queued up for whenever the regular open happens at 7 o'clock. As opposed to, say, over the weekend when you log into your trading account, you can't put any orders in. It'll reject everything, right? Because the market's not trading and it's not accepting orders. When you're in a pre-open, the market's not trading, but it does accept orders in the queue. Now, I really got to get out of here, but while I'm here, I may as well go ahead and quickly change all my charts over to the current contract, and maybe we'll mark it up and draw some lines again, go over that with you guys quickly. And of course, the only one I'm not going to change is my continuous contract here, so I can keep that and get data all the way back. Now, I'm not trading today, so I don't have Sierra Chart open, but Sierra Chart will actually automatically tell you when it's time to roll a couple days early, really. But if you do have Sierra Chart, the little yellow box will come up and say it's time to roll over. Just click on that, choose the next contract, and you're done. So given that the market has opened up so much here, let's open up a 2-hour chart and see if that gives us some stuff to look at. Okay, back it up nice and far. So I'm just going to take my line drawn and start drawing it. And what do I do to find these significant levels? As I mentioned before, just move this line up and down until you see it hit a whole bunch of stuff. All right there, right? Right around there, 4,600. Gonna say right there too. It's about 4,520. I've got my levels written down from before too, and I'll look at them again, but I just do it this way to find new stuff. Yeah, right here, 4,380. This little thing right here, of course, we want. Okay, around 3850. Ding, ding, ding. Ding, 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 ding. Right around here for sure. Say it's around 4250. Find all these little spikes down here. Ding, ding, ding. And then there, there. And then all this. Yep, I believe so. So then you just sort of pick a level, which one you think makes sense there. Is that 4,100? I'm going to put it at 4,100 because we know that's been a big level. Also this. Ding, ding, ding. Ding, ding. And all this junk in here. Where's that? 4,300. I'm not looking over here at the margin when I do this. I'm just looking at the chart. And then I look over at the margin to see the number after. And then we'll just zoom in a little bit to more recent price action. Right here, just this little spike and also this push up, 3,800. Put that in there. Ding, ding, where we're at kind of right now, 3,720. Zoom in a little bit more. Can't help but think there should be something right around here with all this stuff. Right around 4,000. Yeah, for sure. Things here and this little thing here. Let's just put one there anyway, 3,920, see what happens. Or say even 3,900. So that's a good start. Anyway, guys, I really got to get going now, so that's it for today. Anyway, thanks for your patience with me this week. This week and next, I'm going to be pretty busy doing other stuff around home and all that, so I will be hopefully trading a day or two next week. Fingers crossed, depends how everything goes, but as always, keep your questions and comments coming. I have a question and answer video already in the works. Cheat sheet newsletter, daytradernextdoor.com. Thank you so much for watching, everybody. Have a fantastic weekend, and I'll see you again soon. Remember, market holiday on Monday.